What's up, people? It's your boy Kenneth here, 100 Years of Wealth, StreamHomeLoan.com. Back at it again, dropping off some info for you guys. Hopefully, I am adding value to your pursuit of success, your pursuit of home ownership, your understanding of lending. Hopefully, it's adding value. I wanted to drop this video off because this is not only information I think is valuable for you, anyone that's pursuing any sort of goal, success, attainment of a skill, achievement of some sort of goal, like I just said. The secret to this success, right, that we all aim for, whether it's in relationships, business, health, fitness, it is staying the course. Very simple, right? So that's a very simple phrase, but within staying the course, you gain knowledge, you gain experience, you gain expertise, you gain resilience, you gain wisdom, you gain understanding. So even though it's as simple as just staying the course, it's like if you're staying the course but you're blinded and you're not taking in information, then obviously that shit doesn't matter, right? But if you're staying the course while being dynamic and gaining information, which naturally you will because you're engaged and you're focused on the attainment of a goal, staying the course is the true secret. Most people that fail at something, it's because they've stopped, they gave up, they had some sort of bump in the road while they're trying to achieve something, and it was enough for them to be deterred from their goal and take a different path in life and just move away from that goal. But if you never quit and you continue to work on it, even if your attainment happens at a different time than you wanted, you never failed. Maybe the time frame didn't line up with your original expectations, but that's really going to be based on how hard you push and what sort of adjustments you make when. So, right now in our industry, I think in my last video I mentioned this, our rates have gone up, right? Like mortgage interest rates have gone up to where a large portion of our normal clientele has just kind of backed off the market because rates are up. It doesn't present as much immediate direct benefit for people that aren't looking to buy a house or possibly take cash out. If you're looking to refinance to lower your payments, and your rates are good and rates are higher, then it's not going to be a real reason or a reason at all for you to refinance. Now, if you have some immediate cash goal or it makes sense for you to pay off some debt that you've accumulated, there's still going to be benefits there. But right now it's a challenging time for a lot of agents that haven't expanded their clientele base or their portfolio of what type of loans they know how to do, because they've probably become comfortable just working on clients that are looking to refinance, going from one rate to a lower interest rate, which is a very simple benefit. It's always a challenge to get the clients anyway, or either way, but that's a benefit that's easy to present to a client. Hey, you're at a 4% rate with a $1,800 payment. I can give you a 3% rate with a $1,400 payment. Pretty basic savings, right? Pretty basic benefits. So when that goes away because interest rates have ticked up significantly, you start to see a lot of clients just back off and loan officers start to struggle. So I don't have the direct answer for how you immediately turn your production around or how you avoid slumps during the time where rates have ticked up and things like that are changing. But I do know that part of that is just persevering and sticking to it and staying consistent with your efforts. And really in a time where the factors in your market have made it to where it's a little bit more challenging to reach those same results, what you have to do is turn up your activity and turn up your production, or turn up your activity, turn up your prospecting to probably produce the same results. So what I find recently is that even though I'm in the same boat as other loan officers, right? Like my clients aren't looking to refinance as much right now because of the fact that they were in higher interest rates, things like that. Or not, let me take that back, sorry. Because of the rates going up a little bit, and they're obviously not gonna wanna shift into higher interest rates. So just like everyone else, I see a downturn in my rate and term refinance business where people are just looking to lower their interest rate. But I do see that other things are cracking for me because of the fact that I have a large clientele base that I've done different types of transactions for. So you have those people out there that are still looking to take cash out, and they are already operating outside of your normal conventional or conforming traditional type of loan scenario, so they're not as rate sensitive. They're more goal oriented. If I can get a cash out, that's going to put 100 grand in reserves for the next year or two, I'm good, even if my rate goes up a little bit. While someone else is really, they're very specific. I'm at a 4%, I need to go down for this to make sense or whatever. So, and then you have clients that are like self-employed that have used programs in the past that are like bank statement loan programs or asset-driven loan programs, which once again, it's going to put them outside of your normal realm of interest rate. So they're probably more comfortable with a rate that is higher than your going market rate because they're trying to accomplish a specific goal. They know that they don't have your traditional scenario. They're using bank statements as a qualifying income source. But my point is this: if, let's say, out of 100 people, 80 of them fall into your traditional guideline, they're going to refinance along with the low rates when they dip, and then when they're higher up, they're not going to do anything because they're your traditional, standard, full documentation type of client. So they're always going to be getting the best rates available in the market. And once again, if rates shift up, they've probably already accomplished their goal during the time of the lower interest rates. Not everyone, of course, but generally speaking, out of 100 people, or let's say out of those 80 people that are the normal, good credit, traditional financing clients, out of those 80 people, I would say 70 of them have already refinanced to the best case scenario for their loan in the last year or two, because they're very aware of what's going on in the market. They're getting advertisements all the time, and if they're at a higher rate, they're going to try to shift down relatively soon. Some people may just not be aware and not have taken advantage of it, so you have a small percentage that might still have not done anything. But once again, out of that 100, you got the 80 people that are your traditional people. There's going to be 20 people that do no income verification loans, that need cash out, that need to pay off some debt, that have bank statement loan programs that are non-traditional, and they are going to be a little bit more comfortable with slightly higher interest rates. They are going to be a little bit more likely to be taking cash out, and they're going to be a little bit more payment driven in their scenarios, and understanding, hey, if this payment works for me, this is what I am trying to achieve, as opposed to being so rate sensitive. So if you got 20 of those people out there out of the 100, and you know that in order for you to close your couple of deals a month or whatever your number is, that I need to be talking to 100 viable people, then you gotta times 5 that number. So if you got 20 people out of that group of 100, then you gotta figure out how you can contact 5 times those 20 people, 100 of those people, so you can pull out your normal numbers. So if that means just increasing your call volume on a daily basis, adding an additional day of work during the week, you're working on Saturdays, or you're working on Saturdays 3 days out of the month. And instead of making 200 calls a day, you're making 400 calls a day. You're working 2 extra hours or an extra hour at night, and you're shortening your lunch. Whatever it takes, that's what the successful people are going to do. And that's not just the mortgage industry, that's in real estate, that's in any sort of business where you need to attain clients to keep going. That's the reality of it. Or if you're an individual looking for a job, right? If right now things are slower, people aren't hiring as much, instead of 10 applications to get that one job, you may need 100. You got to ask yourself, am I willing to do it? You know what I mean? Like, that's just the reality of success. Unless you're born into wealth and you have everything handed to you, where it's pretty much, you can make mistakes, your first business could fail, you could go bankrupt, you could whatever, there's going to be bread backing you up, long-term bread backing you up. Then if that's not your case, then you have to be driven to do whatever it takes, within the rules, of course, within being a good goddamn person, but you got to do whatever it takes. And that's just talking about your work ethic and your grind. And that sometimes is a challenge. Last thing I'll say before I cut this video off is that a lot of times I'll talk to new loan officers or new real estate agents, and they're asking me like, what have you seen be successful for other agents? What do you find as like a successful trade? And I swear, all my years of working in big call center environments where there's hundreds of agents, where you're seeing the monthly numbers come out, where you can see who's on the top, and then you can look across the room and see that guy's activity, see how he moves, or that girl, that woman, you can see what they do and what kind of plays into their success. And when I was in that environment, I was younger, I was like 23, 24 years old, a little bit less focused, still hungry and hustling, but I could see other people like these top guys just dove into their computer all day, sat at their desk, didn't get up, start to finish, maybe took one small break, and just stay focused on the grind. That's it. You know, that's really it. You know, like it's not about like having the most natural sales pitch or being the most natural salesperson. That's something that comes with time. You get better with time. You add knowledge, you add information. But to counteract the time that takes, you put in more effort up front, and it shortens that learning curve. You pick up more transactions quickly. You price out more scenarios quickly. You pitch more people. You gain confidence and experience quickly. And the only way you can do that is if you like really pack in your days with nothing but activity to lead you towards that goal. So once again, when I make these videos, this is a lot of times a reminder to myself to stay focused on the task at hand, originating transactions, looking for new business, pitching clients, following up with people that I've spoken with before with the same goal in mind. So little tidbit for you guys, stay the course, stay grinding. That's really gonna be the secret to success. Unless you're just lucky, unless shit just falls in your lap, which that's not how life works. You gotta grind to create your luck. The more you grind, the more you're gonna run into scenarios that are looking for you, and you guys work together, and that's when that whole manifesting destiny and universe and all that stuff works. So like and subscribe. I should have asked you guys to like and subscribe halfway through the video, but I'm always late on that because I'm just trying to drop some jewels for you. So like, subscribe, ask a question, comment, share with someone that you know that might be in the industry, real estate or mortgage, or just might have some interest in gaining some knowledge like this. Peace out. 100 years of wealth. Have a great day.